What's up, everybody, and good morning. Welcome to Piper Academy. This is the morning market report, guys. Got a lot of green around us, a little bit of red, but mostly green. On the news that China is going to be turning on the money printers. So we're going to be looking at that, what that means for our markets, why they did it, all that good stuff, guys. And then also, even with that pump last night, guys, it still stands. You can see right there, I got the white arrow pointing at it. That is the 200-day simple moving average. Last night, as we were getting that pump, Bitcoin did another retest on it, failed to get through it. We're going to be looking at that, what that means for Bitcoin, and what levels we can be looking at if it does reject off here, if it breaks through. How am I playing that game? We're going to be looking at that and a whole lot more today on the morning market report. Let's get it, guys. Class is in session. There we go. It is the morning. We are starting. Markets are open right now. And watch the 10-year yield. It's pumping up, but so is the Dow, so is the S&P, so is the NASDAQ, all opening on the side of green today. That's, nothing major, all less than 1%, about 0.3%, 0.16, somewhere around there. But guys, we got data coming out this morning at 8 o'clock. We're going to be looking at that on the economic calendar. And who's going to be doing that with me? Not TradeFly. TradeFly had to work today, everyone. But you know who I do have here? It's the OC guy. Let's go ahead and bring him up. OC, what's up, my man? How you doing today?
I'm doing great. I'm doing fantastic. Today's a good day. It's still Tuesday, still closer than Friday. Closer to Friday. Every day
closer to Friday. Every day is closer to Friday. When you retire, if you don't start a YouTube show, you can actually have every day just be the weekend. But then you start a YouTube show and then you go, I am now back on Monday through Friday schedule, and retirement means nothing. Almost as little as the numbers that come out from the economy data report. So there you go. Let's give a shout out to the people in the chat. We ain't got a whole lot in here yet, but they're starting to trickle in. But we got Kyle Fields in here. Ada Ace, what's up, bro? How you doing, man? Alexander G, the best mod in the business in the house. Justin Eubanks. We got Harp in here, BC Port Corp. If you didn't check out the show this morning, it was a really good show this morning. I know it said 20 September, but they meant 24 September. It's early when they go live, guys. But yeah, go check out the Good Morning Crypto segment from this morning after this show. It was really, really good layout on what this meant for rate cuts and stuff coming. Another round coming. Username, we got in here, Indie Rock Crypto. He said, good morning, fam. Yep, what's up, man? What else we got? We got lots of repeat. Bob. We got Bob. Hey, Bob, I ain't seen you in a while, man. How you doing? Happy to be catching the show live. I almost never can. Well, we're glad to have you here. And Max H. Right there, Mr. Man from our community in the house, RStan 246, and Jim Kramer, Mad Money in the house. Let's go, Jim Kramer. Tell me what's going to pump so I can go dump it. I want to sell whatever you say is going to pump, Jim. Let's go jump into the news, and then let's go talk about what is going on with all of this China stimulus, man, and what it means. So let me get this set up. Got to get the whole setup going here. 1 second. Let's move that into there. And then, yeah, let's jump over to the news. OC, I'll be right back, bro. All right, guys, looking at the news here, we are checking out right now. Not doing the one that has that messed up index anymore, guys. We're looking at a 51 on the fear and greed right now, sitting in neutral on the fear and greed index today. We do have the total market cap coming in at $2.23 trillion, up 0.47%. There. Let's jump over to the crypto bubble, see how these are looking. Let's give them a refresh, and let's see here. Yeah, lots of green on here. Guys, WIF up 13.8%. TIA up 11.9%. What else we got here? Stacks is up 9.4%. That's not bad at all. I'll take it. ICP up 7.9%. What do we have here on the hourly over there? What's going on this hourly, guys? It looks like crypto doing a little pullback on the hourly at the market open. So going to have to take a look at that on the lower time frames today. Looking at Bitcoin sitting at, and I told you, it's that $64,000 range, guys. It's at 63,487 right now. Up on the daily, about 0.4%, but coming down in the last hour. Ethereum is up to $26.36, $2,636, and it is down on the daily. So, they did a really good pump there. And it outperformed Bitcoin for the past couple of days. Now we are seeing that it is getting that cool off in comparison, but really overall just flat. That's what I got to say about that. Looking at what else we got here. That's a good mover. BNB's up 2.1. Solana's up 2.9 on the daily. Doge up 2.4. Any big movers in here? Polkadot's up 5.1. I'll take that. Near Protocol up 6%. ICP up 8% now, moving up 3 positions to number 22. What got pushed down? Guys, Caspa, Retro Mike Tech's whole mission against Caspa evidently taking effect, guys. Down to number 27, dropping 4 positions there. Down on the daily, on the hourly, the daily, the weekly, and the monthly. Sitting at 16.3 cents. We might need to take a look at that one today, too. Any other big movers? Stacks is up 9.4%. And yeah, we'll round it out there, guys. There's some decent movers on there today. But yeah, Casper losing 4 of its spots, down 4 positions there on the total market cap. Looking at the economic calendar today, guys, we did have the Schiller home prices that came in this morning. This came in at 7 a.m. my time, 9 a.m. on the East Coast, so about 30 minutes ago. This came in, it was previously at 0.6% to the upside, positive growth. They expected that was going to be positive growth, but a little bit less than last month's. Actually came in was 0% change. So home prices month over month, not really changing right now. Case Schiller home prices, though, for year over year, they actually expected that it would come in on forecast and consensus at 5.8%. Previously was at 6.5%. Year over year, getting very expensive. Actually came in at 5.9. So a little more than what they expected, not as much as last month. I think a lot of home prices right now are not really going up because people are expecting for rates to come down. And so now they're looking. And so, why would I raise my home prices right now when I'm also not able to give them really good rates? So that's what I think we're seeing there on the home prices. Let me get this set up here. There we go. Perfect. Yeah, I didn't have my phone over here showing me what we were broadcasting. CB consumer confidence, guys. We're going to come back and look at this. Okay, this one is supposed to be was at 103.3. This is a ranking that they give it. They're expecting it to be higher. They're expecting that the consumer confidence is going to be up for the month of September. We're going to come back and take a look at that here at the top of the hour and see how that looks. And then obviously today, this afternoon, guys, we've got crude oil stock changes. They're expecting it to be way down. We've talked about this. Oil being down is not a good sign economically. That means that the economy is contracting. When less oil prices means less demand. Less demand is usually because of economic contracting. So looking at tomorrow, guys, we do have new home sales month over month and then in general. And then Thursday, we're going to get those durable good orders. Remember that GDP growth rate quarter over quarter. They're expecting it to be 3%. And then Friday is going to be the big one. Friday morning, guys, we're going to get that core PCE. They're expecting that it's going to be neutral. We'll see how that plays out. If this comes in hot, if it comes in hot, watch out, guys. And hot would be higher than this. I do think that we could get Friday sell-off if that happens. Looking here at the CME, and this is what they were talking about this morning on the Good Morning Crypto show, guys, with BC Port Corp and Lunar Beaches. They were talking about more rate cuts coming. We are now priced in, according to CME. This is the CME Fed Watch, okay? CME Group Fed Watch. For November, on November 7th. And I want to remind you guys, there's a big event going on right about that time. It's called the elections for some position. I think maybe, I don't know, presidential. We're going to be seeing the 51.5% chance versus a 48.5% chance. We are now cooked higher odds for a 50 basis point rate cut again in November, guys. I don't think that plays out well. I know I said this about the last one. I don't think this one does either. So we'll see. If I keep saying that, maybe one of these times I'll be right. I was wrong last time. It happens. I did not see how 50 basis points was going to be bullish for the markets. Maybe they see something I don't, but evidently they're not looking at a lot of economic data. I see 50 basis points again not being a good sign. It screams something's wrong. It screams that something's wrong. So Well, yeah, let's get over. Do I want to look at this yet? Yeah, let's talk about this and then we'll come back and talk about that. China is cutting its reserve requirement ratio for banks by 50 basis points. So they did a 50 basis point rate cut. As China's economy slows, their central bank is attempting to stimulate demand. China is planning to recapitalize its biggest commercial lenders for the first time in more than a decade, seeking to strengthen the industry, battling with record low margins, sinking profits, and rising bad debt. I got an article over here. Let's take a look at this one real fast, and then we'll come back. And OC, you and I are going to discuss this. It says China to add capital at big banks for the first time in a decade. China's biggest banks are struggling with record low margins. China unveiled cuts to mortgage rates, big stimulus blitz. That is global liquidity, and that's why I talked about that at the beginning. We'll kind of lay that out too. It's a little complex, but we're trying to lay it out. China is planning to recapitalize its biggest commercial lenders for the first time in more than a decade in a bid to strengthen the industry, battling with record low margins, sinking profits, and rising bad debt. At a rare press conference on Tuesday, authorities flagged that they will increase the core tier one capital at its 6 major commercial banks, along with a slew of other measures to shore up real estate market and the economy. Capital will be injected to different banks in turns and with different policies. That's what, according to Lee Yunes, without giving any more details, the regulator will urge big banks to enhance capital management capabilities and strengthen operations to better serve as a driving force for real economy. Authorities on Tuesday announced a major stimulus push to shore up the growth. The plan included broad-based cuts to existing mortgage rates, adding to pressure on banks by lowering annual interest expenses by about 150 billion yuan, equates to about $21 billion in US. And regulators also reduced how much banks need to hold in reserves, which means if you know anything about fractional reserve banking, they don't have to have a huge amount in their reserves for what they lend out. They can lend out a lot more. So that is what we got off of that. Guys, the big point of this is that they typically lend money, put money available out to banks. And while they did do that this time, they also pushed out a lot of other ways that it gets down and trickles to the people. They really want the people to buy in on their stock market and buy in on real estate markets because overall, that is what moves their GDP. So I've been telling you guys forever, China is absolutely wrecked. They're going through some extreme measures here, but I will say, according to Bloomberg and CNBC Pro, they were both very, very well laid out plans and very complex and comprehensive policies. So it's going to be interesting to see how this works for them. But the fact that they're giving the people money and they are actually moving into the stock market this morning. I got a chart for that. I'll show you that here in a minute also. But OC, your thoughts on this is China making the right move, first of all, with this? Second question to that, is this going to lend to the global liquidity, which I talk about all the time? Global liquidity is one of the thing that really moves markets, right? If you want to see global markets move and avoid recession, get global liquidity in there, right? And so is this going to trickle outside into global liquidity? And then I guess the last question is, did they wait for this for us to cut rates so that did they have to cut their rates this way because we cut our rates our way and they did not want a disparity in the strength of currencies? And they said the only way for us to compete with the US is to do a cut and other stuff. I'd love to hear your thoughts on all of that. If you need me to re-ask any of it, let me know. I know that was 3 questions and they're pretty complex questions, but go for it.
All right, so it's just about the rate cuts of China, right? How they were so aggressive on the rate cuts, correct?
Yeah, they cut rates in China.
And then
And then they're
first
allowing that money. They also
is
pushed
if they
$21 billion into the banking system that can be lent out to people, the people of China, so that they can invest in stocks and invest in real estate because their economy is about to collapse because of lack of investment. So
Yeah. So, I mean, let's get first started by acknowledging that China has stopped pushing some international data since, I believe, 2024 or something like around. No, sorry, 2020, right? Something around that. I'm not 100% sure of the date, but they have stopped sharing some data. I don't exactly remember which kind of data was it, but I do know that it has to do with population and some economical factors there. So we don't know the whole story on how it will be impacting. Although we know inflation is not it's not multifactorial. It is basically just a single way sided. And I do believe that by doing so, they are pushing I think a note or a little, hey guys, look at, we are not as bad as you guys thought. We are kind of like a back, right? Where they're pushing a note to the world. And is this a correct move? I don't know. I think it is. I mean,
Yes.
they're helping their own economy by helping themselves. I I don't know. I
You
see
you
myself
you
kind of
you
like cutting
froze.
out.
You went into slow motion. I'm not sure what's going on with your Starlink. We need to call Elon Musk and get him on the phone.
Yeah, I guess. I don't know what's going on. Yeah, my camera seems fine. All right. Moving on. Then is this the correct timing? I think so. I think they were just waiting on see how the United States were playing their cards and see how they're handling their economy, so they can maybe either duplicate and hold that money or then push it up. Remember that they are pushing it to the global markets, so that is going to also act as a liquidity surge there. And is it going to be affecting the global markets? Absolutely, but I don't think it's going to be affecting in the wrong way. I think they're going to be pushing up maybe some falling prices in the market. They're going to be picking it up on the global side. So I think it's good for the overall economy. And I think they did a good job. I think at least on the theoretical side, but it remains to be seen how it all affect the global industry. But so overall, I think they played their cards good enough.
Yeah. Do you think that this was because they were waiting for us to see what we did, and now they had to compete for currency strength? That was the other question.
I don't think so. Currency strength is not actually a debate. I will say it, and that is because the way that they handle their coin. Let's remember that they have a digital overall currency and they control their opponents, right? So if you say something against the regime, maybe your money can no longer buy meat, can no longer buy a subscription, can no longer buy education for your children, so on and so forth, right?
Yep.
So I think into a actually real world um strength of a coin, I don't think they're a competition. But I will be talking about the economy, overall economy, and yes, I will say that they are competing with strengthening their economy. Although we know, like for example, labor data has been cut out and it's been not been pushing out lately, and many other factors, right? So yeah, I don't think so. They're competing against that.
Okay. Well, I'm sitting here looking at this. I'm looking at this one chart here. So the Chinese stock market is up 3% this morning. Okay. However, what one of the people here is talking about. Let's jump over to my news chart. Let's get you in here. There we go. Oh, sir, why are you like that? Um, did you come in with your own today, OC? Your own background?
Oh, mm, maybe. Let
Maybe. All
me.
right. Anyway, we'll
Oh,
look here and check it out, guys.
that's
What we're
there you
seeing
go.
here on this chart is the stimulus has taken place in China before this year. If you guys don't know, this is everyone's talking like this is the first one, but China markets have rallied 20% in the past when hopes about stimulus driven turnaround happening, and as it happened in May of this year, but it fizzled out very quick. You see it pumped up 21.3%, and then drop back down. Now the Hang Seng is getting another stimulus. So they did a stimulus before. The big difference here that I want to lay out is that this one went to the banks to go to the people for the stock markets. The other one only went to the People's Bank of China, the PBOC. So there is a bit of a difference here. I just wanted to lay that out. But we are seeing a pump in copper today. We're seeing a pump in oil today. Like there's some industrial pumps and moves coming today. So maybe OC, you can take a look at a couple of those. But one of the ones was Alibaba. Alibaba, you got the Amazon of China, guys. If I had to put my money somewhere based on China and the Hang Seng for the Chinese stock move, it would be Alibaba. I'm betting that Alibaba rips off the ceiling when it busts up through here. So maybe we could take a look at that one too. Do you have Alibaba up right now?
I don't have Alibaba, but I can put it up.
Yeah, pull it up. Let's take a look at that because I think this one's going to be the one that really pumps off, and then we'll jump into check out Bitcoin here, guys. But yeah, this is if there was anything that could move the markets, and it's not because it's China, it's not because it's Chinese markets, it's not because of anything like that. It is because this adds global liquidity. Without global liquidity, markets aren't going to do anything. So we do have to take that into account that we're adding global liquidity. That means money's going to flow to a lot of places. And I do believe one of those places will be Bitcoin if we break that 64K. Let's jump over to OC's chart and see what he's seeing here in Alibaba. How's Alibaba reacted to this?
Oh man, it's just reacting very, very nice. In fact, we have a huge CME gap in here, not only one but two, right? I mean, it's just been moving upwards. But also, we need to remember that it's not only Alibaba based on their China economy. You also can see that actually one of the news was near spiking 31%, and we are seeing that flow into crypto. Maybe not especially through to Bitcoin, but we are seeing through AI coins. And why is that? Like near spiking 31% already, kind of like a give it up. Near protocol currently moving up. And here's the thing: this came on the back that partnership between leading AI chip maker Nvidia and guess who else? Alibaba. So I mean, we're seeing not only interest going to crypto through a proxy coin, which in this case is going to be near, but also we can see, like the partnership from Nvidia and Alibaba. I think this is good. This is very dangerous for the United States. I don't see which other one. It's just making that partnership because Alibaba is very close to the China's regime. So let's see how the states reacts to this partnership. But so far, I would say that Baba, it's just playing out its cards very, very, very nicely. Let me just bring up a couple of indicators in here. I'm gonna pull in. There we go, my volume indicator. And at this point, we're looking for
Hold on,
previous
OC.
highs in here. So no,
OC,
yep.
we'll come back to that. I just got breaking news sent to me by Crypto Billy. Shout out to Crypto Billy. He's in the chat, and we'll get ready to talk about Billy Goat Tales. However, this is breaking news that just came out. Billy just sent this over, guys. Bitcoin Archive just in Satoshi Era Wallet. You guys remember last week I talked about one of these wallets had awoken, right? And it was from that within that first month of when Satoshi Nakamoto was testing, sending out the 50 Bitcoin, right? Satoshi Era Wallet that mined Bitcoin 1 month after the launch in 2009 has just moved 5 Bitcoin. Just moved. Let's go back and talk about that because that's huge news. That is someone who is either part of Satoshi Nakamoto as a group entity or knows who Satoshi Nakamoto is. They just moved 5 Bitcoin. How is the market's going to react to this? It's not Satoshi Nakamoto's wallet, but it's within the first month of its creation. How are the markets going to react to this when they see this? Is this going to cause fear? Then we'll get back to your chart, but this is breaking news. I appreciate you, Crypto Billy. OC, thoughts?
I don't know. I mean, this is a hard question. I would say it's going to be pumping, but also remember that many of these movements, and I think you have mentioned this before, um, we maybe have been reaching the points of where we are right now because of institutional money, right? Because of how institutions were buying in. So I would say for individuals, this is going to be bullish, or this is bullish, right? But remember, we all have much more money than institutions, but we need to aim the same point all at once. The only difference is that institutional money, it is aiming at one point with less money, but a lot of strength because they can move the price action here. So I would say this will be scary for institutions. This is gonna be cool, or this is gonna be bullish for the people. So I would say I don't know. This is going to be a big battle of interest or fear in FOMO. So, what are your thoughts? I mean, I don't know. Is it going to go up or down?
The comments are great in here. This is how FUD begins. Looks like Satoshi just checked his retirement fund. What else we got here? How much Bitcoin does this wallet contain in total? 5 of 5 wouldn't be that much of a deal, no? Drop the address. People want the address. They want to go check it out. Wake me up when they move 500 or 5,000 Bitcoin. I don't think people are realizing that, yes, it's not that much Bitcoin, but it's the fact that it is one of the oldest wallets in existence that has never moved Bitcoin. All of a sudden is now moving Bitcoin. So that's some pretty big news there, guys. Appreciate you, Billy, for letting us know about that. That's why I love the alumni. We got the best community out. It's scary, but it's not Satoshi's wallet. No. And then shout out to Alex O Crypto in the house. That is my man right there. It's my brother. Glad to see you here, man. Dropping all the otters in the place, guys. I see them. I see you guys came in here and just dropped them like bombs. Shakalaka. That's what I'm talking about. OC, let's jump over. Let's finish looking at what you were looking at. I'm going to keep an eye on the Bitcoin chart and see how if there's any reaction at all to this. As of right now, it does not look like it though. So.
Absolutely. Very quick. Just looking for smart money entries. I would say looking at these stocks. Why? Because they have big reactions and we can see that they have small deficits. So I will be saying that we still have a little bit more to go, especially because we are above the dynamic reactor and we're making that move. I mean, money flow could be absolutely be ripping up here. So let's just be a little bit careful. I will be aiming somewhere around those areas before taking some profits if you enter, or maybe starting to set a DCA shorting position here. Do not underestimate the power of this partnership, and of course, this extra money that's coming in on part of China, because this could absolutely don't care about the smart money entries and then just break out and keep its momentum up. Definitely looking at this next area in here. So this is going to be my next area of resistance. So this is going to be my next entry point in the market. So let's just take a look at a bit of a review. So sorry, a bit of a review. So shorting position, if it breaks out retest, entering for long and then taking some profits, and next shorting position all the way up here at 117.42. That's what I'm seeing on Alibaba. Turning it back to you, Piper.
Awesome. Let's jump over here. Let's take a look at my chart. We're going to start off with some Bitcoin TA, talk about this because we got the stimulus, global liquidity, right? It matters. It does. Trust me. However, pause for effect. If you know, you know. I'm watching this chart here, guys. And this is what I said. Yes, it's bullish that this liquidity is happening with the global liquidity. But we still have this 200-day simple moving average. And I feel like I'm, just droning on about this. But guys, look how many times we keep getting rejected. We got rejected last night off of it again on the pump of the news from China. This 200-day simple moving average is vital and key. Why? Because when we come over here and we take a look, we are sitting beneath that 200-day moving average. We fell beneath it back here in August of 2024, and we have not been able to get back above it. Historically, dropping beneath that level has never, ever been good. It happens at the end of the cycle, guys. So if we go back here and take a look, load for me. We're looking at these, halving levels, right? That's what we're seeing here. Are you on the wrong chart? You are on the wrong chart, sir. Can you go to a different chart for me, that would be
In
awesome.
the meantime, shout out to Crypto Pollo. He just dropped 5 memberships to Piper Academy.
What? Crypto Pollo, my man. What's
Yeah.
up, bro? Appreciate that, man. Who got him? Who got him? Read them off there, OC.
Crypto Pollo is now a member. Also, Golden Crypto and Yoda. So those ones got it. So welcome. Or maybe Robert Jones
Robert Jones.
and Nick
Oh, Robert
Carter
Jones.
G. So also welcome.
And then Nick Otter G. Robert Jones was the one that was asking about all of the Japanese carry trade stuff. So that was that was a big one. So let me go back over here. I've got the right chart up now for this 200 day. I'm going to go back and take a look at that. Here we go. Crypto Pollo, we appreciate you, man. Much love. A big shout out to you, bro. Taking a look here, though, guys. Every halving, we've been above the 200 day, right? Here's the halving event back in 2020. We run up. We stay nice and running above this, right? You can see we do have some small pullbacks, but what is going? Oh, I see why. I'm on the. Let's go to. I was on a 4 hour there. Let's go back here to dailies, and then we'll take a look at that. That's going to be much better for us. You can see here, 200 day moving average is our support. We stay there above that the whole time after the halving. Go back further. You can see it there. Support. Let me get rid of that fib because it is nasty. There we go. Support all the way up. Once we break beneath it, that is the bearish move, right? We did have an area here after the halving where we had the summer of 2021. It was that summer where we had, I didn't say the cycle was over, username. I'm going to wrap that up. I promise. Just staying with me here. We did have the summer where we dropped beneath it, but guys, that did lead to a 50% sell-off there. You can see that right there. That was a actually 55% sell-off as we went beneath that and then pumped back up above it. Next cycle, after the top there, we came in, became resistance, start getting support off of it. Here's a new halving cycle. This is the first time we've ever broke underneath the 200-day moving average during the actual bull run. That's effectively the bull run. And I think because of this, here's my theory on this. Let's lay it out here and talk about it, and then we'll come back and then we'll do some where are we at currently on the 4 hour looking at Bitcoin. But I think that we got such a push up here from institutional money for the ETFs, guys, that it set us above the 200-day moving average way too early. Okay? Because if we go back and we look at how the other cycles have looked, when we go back here, you can see it happened right before, and then we had our support above it, right? Go back here, it happened, I guess back in history, it happened way before, but back in history, we had a whole different thing going on in 2015. I think with the ETF this cycle, just like this last cycle, we broke above it way, way, way later, or way, way more early than what we typically do, okay? And so because of that ETF push, we are sitting much higher above this for the pullback, which just put us in the range beneath this. And then traders, typical traders, your TradFi guys, they trade on this 200-day all the time. This is their thing. If you go and look at this other chart over here, I've got one of the oldest trade strategies in the world in TradFi used on this right chart. What is it? It's the Bollinger Band and the 200-day simple moving average, all on the daily. Okay? That is how TradFi trades. And I think that being beneath this adds a sense of sentiment of negativity, bearishness, if you will, right out the gate. So until we take this, and I think that's going to take time, and we have to avoid that recession because I do have some recessionary data that we're going to talk about here in a bit after this. But until we retake this and prove that Jerome Powell has successfully stuck the soft landing, okay, not a hard landing, then we are going to see a continuation. You can see we're starting to curve here, guys. That's not a good thing. I do think that we're going to have lower lows on Bitcoin before we break that 200. If we do break above it, we would have to close a weekly on a retest on it for me to be bullish. But yeah, let's jump back over here. I've heard here we're getting dumps now. Yes, we are. We are getting sell off here on the 12 hour. Let's look at the hourly and see how that is looking. Yeah, we're definitely getting some sell off now, guys. Bitcoin's currently fighting to hold this upper gold trade band of our predictive ranges here, and is now losing some steam. You can see we had the downtrend here on the hourly. Our money flow is turning red, volume starting to curve. The true 7 is pointing downward, and then our ribbon, oscillator ribbon, also pointing downward. So yes, we are getting some sell off here. I am going to be calling for about, and I had this on my chart yesterday talking about it. Let's go here, isolate this off, and turn on that. There we go. Let's get that going back in here. There we go. Yeah, I am going to be looking, guys, for us to pull back down to the levels of about $61,000. Why? Because if we fall through the dynamic and quantum reactors from Chart Prime, guys, this T box here has to do with liquidity, okay? And that liquidity is coming in off of a fixed range volume profile. Can I get that to load? Thanks. Awesome. It probably helps if you turn it on. Fixed range volume profile. Okay, it is on. Cool. Is because of that fixed range volume profile, guys, for one, and then for two, because that is where the 100-day simple moving average is coming in right there too. There we go. Put this back on the daily, and I'll get that to load. There we go. Perfect. Perfect. All right, here we go. That volume node there, guys, this is the last line in the sand. There's a gap right here, and then this is the last line coming in at about 59,500. So this box here coming in with the 100-day, the 50-day moving in there, and then again, if I put this on with the daily, you'll see that the quantum reactor is the dynamic reactor is coming in right there also. So I do believe the line in the sand for the first move is going to be $61,000. Trickling down after that, guys, I'm looking at a bottom side of about $59,000. That is also going to be in range with the golden pocket, coincidentally. So, OC, let's jump over, see what you're seeing on your chart, and then I will go and pull up the heat map, and then we'll get into some altcoins and see how this data is looking here, because we are just past the top of the hour. So what you got for us?
Absolutely. Let me get started with Ave. Ave was requested by Crypto Pollo. Let's take a look at that. Also, he was comparing to Comp, CRV, and BNB because of DeFi is starting to move. So Ave he's been having a great movement. I mean, this has been crazy. If we start taking a look at this, I mean, I could even call it the next Bitcoin. Not just kidding, but that was pretty good. 131%. No leverage. Yeah, I know, pretty bad joke. Since 4th of August, right? I mean, this has been crazy. Thank you for bringing it to my attention. I was completely blind to Aave till I would say 6 months ago, right? Thank you so much for that, Crypto Pollo. So let me just bring up a couple of things in here. We are on a daily resistance here. This is a big resistance. Seems like we are retracing out of this same resistance. So a good pullback will be beneficial for the markets, especially for average price. So I would want, and remember, not that I want is the markets are going to do it, but I would want to see the price coming back to this set of reactors, to the nuclear power plant right down here, and also start looking at a couple of other resistances. Yes, we have them right here. We see a couple of order blocks in which we have two main order blocks, two soft order blocks that are very close to each other. This one, this period is very, very big and it's positive. And then the next one is very, very big and negative. So we have a very small lining here. What does this mean?
OC, you have frozen, sir.
It means that if we slowly, is my audio keep playing?
Nope, you're good now. It means
I
what,
don't know
sir?
what's going on. Oh, I see. My internet is just not doing great. All right. It means that if we come down slowly, let's just wait for it to load. Let me just finish up. If we come back slowly, we're gonna grab the order block that is in here, and we're gonna bounce up, maybe making that double top or even a higher high, right? But if we come back faster and then we get this liquidity, the next thing that we're gonna be confronting, it is this big two bearish disparity. So this could be meaning that we're gonna bounce and break down. We just need to be very, very careful. Let's just wait not to have a dumping here and just keep moving slowly to the downside before till we can grab some momentum back up to the upside. So that's what I got, Piper. Let me try it back to you.
Awesome. Looking here, guys, on this chart, you guys can see this. I'm going to zoom it in for a second so you can see what I'm talking about here. This is the heat map, and I do want to show you guys there's not a lot up here on this top piece. You can see that, right? It's very there's some liquidity grab, like 9.35 million up here, 38 million there, right? But you see this big yellow line there at the bottom? That big yellow line has $873 million and close to $1 billion there. Actually, there's 595 million there, and then right above it, 873 million. That's coming in at about $57,000. That is the hottest line we have on here on the monthly. And that is down near those levels that I've been talking about on Bitcoin. If we can't get above that 200 and we do have some type of pullback, it is very likely going to be in those lower levels. That $57,000, by the way, sitting perfectly inside the golden pocket. If we look here at this red line, let me turn this other stuff off so you don't get confused. This red line right here, that is the 300-day simple moving average. You can see that we have broken it before, but if we return back down to that level, that's about 58,000. We have wicked below it many times. If we come all the way down to the bottom of the golden pocket on the 0.618, we would be looking at 56,137. So let's go look at this economic data that just came in, guys. We got a refresh on this, and it's going to be that consumer confidence. Yep. Yeah, guys, I didn't think it was going to be coming in that good. I talked about this as they were calling for it to be a little bit lower than what it was, but they actually came in under 100. So not a good look here on consumer confidence right now. People are not buying the Kool-Aid that they are selling. So 50 basis points, I think, scared a lot more people than what they really had. And I'm looking over here at the markets right now. They are starting to get a little bit of pullback too. The Dow barely up. The S&P has now gone red for the day. And then for the NASDAQ, it is about to pop up. It has also gone red for the day. So yeah, market's getting a sell-off now on this, in addition to Bitcoin. Big reasons for those fears, guys, and I wanted this data to come in first before I talked about this. Let's go take a look over here and see what this is talking about. It says you can't make this up. This is from Global Markets Investor. And we'll go over to the news chart. That way OC can be on here with me. Hey, what's up, OC? You can't make this up. In 2001, it took over a year to get the final estimate for the Q1 GDP. Over a year. And it was revised from 2% to the upside to negative 1.3% to the downside. In other words, it took more than 12 months to find out that the U.S. economy fell into a recession last year, the previous year. I think we only had one. I want to show you this U.S. recession. Only one of those had been a soft landing. So that's the question there. Are we going to get revised data for the year over year that comes out where it's a year later, and we find out that, oh, this stuff really wasn't that good and things aren't as good as we thought. And now we're looking at recessions. We've been in a recession officially for over a year, and that's what the data says. We'll talk about that in the second, OC. But the other piece of data that I wanted to show was that markets now see an 80% chance of a soft landing. With that consumer sentiment that I just saw, I am seeing that maybe it's not that much, and we're only getting 80% from the people that were willing to talk about it. Since 1980, the Fed has only seen one soft landing, and it was described as one of the Fed's proudest accomplishments. Only 17% of rate cut cycles have ended in a soft landing. That's a very low likelihood. And now we're seeing, like I just showed you guys earlier, a 51.5% chance of us getting 50 basis points again. So on top of that, guys, this is why I wanted to wait until that consumer sentiment came in. Market pricing signals a 100% probability, I should say, which is a higher likelihood than a possibility, of U.S. recession. The market is currently pricing in over 2% Fed rate cuts within 12 months, the most since the financial crisis. This implies a 100% probability of a recession in the next 12 months. OC, are we going to, first off, are we going to see them come back and revise the GDP and we find out that there's been a recession already? We're already in a recession. Is that going to be the case there that we see? And then are we going to see this recession that's already taken place become a thing like in 6 months that just dumps everything? I want to know what your thoughts are. Did we just get another? No, we didn't. Okay. Okay. What are your thoughts on this? Are we in a recession? Did we already get notification that we're in a recession and it's just a revised number waiting to come out? And then are we going to have a soft landing? That's the two questions for you today, because the markets are saying not going to get a soft landing and very likely have a recession. And then we're seeing a chance that it might actually even be worse than that. We've been in a recession already and people have been just throwing their money at the wall that's getting ready to crumble down. Go for it. What's your thoughts?
All right, so let's get started first before I come up with my opinion. Guys, if you feel that you are on the edge of the knife, risk off, right? Protect your assets. That's what I have been doing as Bitcoin have been going out. I've been just getting out a little bit of Bitcoin so I can be on cash as we were going up. Am I a little bit behind schedule? Maybe. Am I being prepared for the maybe upcoming pump or dump? Absolutely yes. So because I don't know with certainty what the markets are going to be doing, I'm risking off into a position where whatever happens, I'm going to be making money, right? That is the key. So when we have said that, this is not financial advice. I think that we are already to a recession. The revised numbers, I don't think they're going to reflect it. I think just like in circles, into a circus, they're going to do any kind of, I don't know, any kind of movements, any kind of show, any kind of whatever they need to cover it up. And then we might see a so-called soft landing, which in real life I don't think there's gonna be that soft, but also I don't think there's gonna be that serious so far. So I mean, something that you can hear all across the board is that we are cooking a massive recession, right? This is being man-made. This is being provoked. Has to do with fiat. So there's only one thing that may be helping us out of this recession, which is investment out of fiat or transferring whatever there is left value of that fiat into something else. What could that something else be? Well, we have seen price of gold, we have been price of other metals, and we have seen price of industry. I think those ones are going to be saving us to have a very hard crash and have that soft landing. But once again, that doesn't mean that the overall markets are not going to go down. It only means that whenever you transit your value is going to recuperate faster than fiat will. So those two questions. Are we in a recession? I do think so. Are we going to be seeing the results of it in paper? I don't think so. I think they're going to be covering up. And finally, are we going to have a soft landing? I think at the beginning, they're going to call it a soft landing before the worst of it happens. And then they're going to be faking their way out of it. That's what I think.
Okay.
But what are your thoughts?
I will say they do have the argument that we haven't seen massive layoffs. And that the reason for that is the reason that I say that they have that as an argument, as a debate point, is because in a recession, it also one of the symptoms of a recession that is always present is massive layoffs. And so Crux and I actually were talking about this week, and I said, I think that it doesn't happen at the beginning of the recession. I think we have this stretched out recession period going on. If we are in one, it's been stretched out. And we're seeing the symptoms happen at a slower rate. I do think that when we start to get the job losses, the massive layoffs from companies, I think it comes with the quarterly P&Es. When the corporations start doing their earnings report in the next quarter and they are not that good, that's when the layoffs are going to happen, because then they have a justification for the layoffs that don't scare people If they would just start doing layoffs and they had good earning numbers, then people would freak out because they think, oh my God, something's wrong with the company, right? But if they have bad P&E that they can blame on the economy and then they do layoffs, it will have sell-off, but it tends to move people into the realm of, well, they are laying off people to save money. That is going to help their next earnings reports. And the sell-off is not as bad. So I think that's what we're going to see. Slow, very slow, and then suddenly all at once. And that's where the jobs are going to trigger in that really hurt, that really give the, yes, we are in a recession. So I'm going to be watching for that stuff. That's really going to be the earnings. The earnings reports is going to be what we have to see. So we got a request for Chainlink, Tesla, and CleanSpark. I will knock out Link and CleanSpark if you want to take Tesla. I'll go ahead and grab CleanSpark now, and then you can do Tesla, and then I'll come back and close it out with Link at the bottom of the hour here. How's that sound, OC?
Perfect. Let's do that.
Perfect. Let's do that. Taking a look here, guys. The support level. I talked about this earlier last week, I guess a couple weeks ago. I said, look, here's the bottom line. We're losing all the key levels here on mining stocks, okay? Once we broke here on the 50, remember, anything below the 50, if you break it, coming downward, that is bearish, right? And we lost that. Closed on the daily here for the 618. Got a retest of that 6.6. This is your golden pocket. That retest there, double top on it, and then bam, down it falls even more. Platinum pocket was our saving grace. We got one candle below it. Next day, pulled right back above it, and we're sitting in this platinum pocket. I still think that we are heading down to the one-to-one line. It is going to be this level right here. That's coming in at about $6.44 to $5.69. If you come back here in history and look, nice little bounce here of liquidity there too. You had support there and support there. Also was previous resistance. So that is what I'm watching here on the volume nodes, on all the indicators, on all of my fibs. I will be heavily buying in once we break $6.50. Anything below that number, I'm buying CleanSpark. That's just all there is to it. That's what I have there. Let's kick it over to the oscillator just to see how this is looking. Oscillator Pro is showing some strength here, but you see how this is not really a sharp uptick. That's what we want to see. This is kind of just meh, coming up on that zero line, probably going to get rejected there. Money flow is still red, and the volume is just dead, guys. It's not looking pretty. I would say, yeah, I'm shooting $6.50, buying CleanSpark. That's just me. Do your own research. Let's kick it over to OC's chart.
So let's take a look at really quick at Tesla because we're running out of time at this point. Let me just mention something. Every single time that we hit those tops on the bands, there's been fire. We have been seeing that price rejection out of those areas, right? So remember, it's not about the breakout. It is about the retest. We have that beautiful retest and off we go. Let's go step by step, but quick. Here we go. Let me turn on my next reactors, right? It's not about the breakout. It's about the retest rejecting out once again from this area. Why am I bringing this up? Because when I start seeing another kind of resistance and support, we had that retest on that big support. And yes, despite we have open area right here and we can get all the way up here, we are very close. Dangerously close to the top of that band, right? So maybe an incoming reversal is happening. Let me just also point out at what's happening with momentum. Remember that ribbon shows momentum, and what we're having right now, despite it is green, we are seeing a flip of the ribbon, right? Something that is interesting, and I don't like to see it. It is that if we kind of like a cross back this line here, we're gonna be making a lower high. While right here, we're having a higher low. And that only can mean one thing, which is a divergence, right? So let's also take a look at what happens here. Look at here, higher high, lower high, and keep going up, divergence, right? So looking for a possible divergence running into resistance area as well, that is dangerous. So just be careful on Tesla. We're getting close to this reversal. We could be having actually an early reversal depending on how fast will this momentum plays out. But keep an eye. Would I say this is time to buy? No, I will not. I would say that my entry point was on the breakout retest right here. At this point, I need to wait for a retracement and then a confirmation for my next movement upwards. What would that look like? Let's just, for example, think that this goes back here. When I'm hitting this support, I want to see flip up the ribbon to the upside, like I did see here, like I did see here. As you can see, pairing with that support, maybe one kind of confirmation, entering for a long and aiming for my very next resistance. That is in the case that we keep going downwards. In the case that we keep going upwards, well, I'm going to be aiming for a possible reversal here as we break through the zero line and then riding it all the way down here, and then once again looking for that movement or push back up. Instead of bullish, yes, it is bullish, and we have a ton of support right down here, right at a resistance. That's why I'm mostly into coming first down here and then bouncing upwards. So that's what I have for Tesla. Let me turn it back to you, Piper.
Awesome. Let's jump in and check out Chainlink, guys. We talked about this several times last week, and I said, look, this is the box. You guys remember me talking about my little range box here? I said, this is the box of support and resistance that we have to watch. It's based on this volume node here, and then all of the play that was happening here with the 50-day moving average. If we take this into a little bit of focus here, there we go. Let's stretch it out a little bit. You can see that we had a nice bounce on the platinum pocket here, 786. We came back up, rejected on that volume node line, came back down, retested it perfectly, guys. There's a little bounce range right in there that could give you a play of about, nope, that's the wrong button. Thank you very much. There we go. That is a play range of about 7.5%. You could really just make some money on this levels. That bottom level of this, guys, $10.85. Top level of this, about $11.70, $11.68, okay? What I will point out, though, the 100-day is starting to move down. We did have this downtrend. We did get a lower amount here on the True 7 from the Oscillator Pro. I think that we're going to get a curvature here on this volume, and we're probably going to head back down again. Where are we going to go? If we break this 50-day, guys, we're going to come back down and retest $10.50 again. If we break that, why not test the bottom of that platinum pocket? That's $8.90. Now, if we break above this, watch for a rejection on the 100-day. That's going to be coming in at about $12 even. If we break through that, then it's the golden pocket, and we have the value area low. So lots of resistance above us and below us here. I actually think that what I'm seeing right now, we're going to get a downward move down to the 50, and I'm looking at a target of $10.84 for that short on Chainlink. So there we go. And then let's jump over to my Billy Goat Tales here. We're at the bottom of the hour, so let's go ahead and talk about this. Guys, tonight at 9 p.m. Eastern Standard Time, we are going to see Billy Goat Tales tonight hosting Karate Combat Champion Jenna X interview. She just went to Singapore, kicked the crap out of Crypto Snack, and she won, and it was awesome to see. I showed you guys some of the pictures of her ducking and dodging, and she was whooping on her, so it was really, really good fight. Very proud of my wingman, Jenna X, and she's going to be on there tonight doing an interview with Billy Goat Tales. So go join that, 9 p.m. My reminder is set. You guys need to set your reminder too. Let's jump over here. Duo Cam and OC. We've got our trade. Are you going to be at the trade thing today with FD White and I? You want to join us today, this afternoon?
Let's do it.
Yes. All right, so at 4 p.m. Eastern Standard Time, guys, we're going to be doing Trade Academy today with FD White and OC and myself. And then tonight at about a half an hour before this, it's going to be at 8:30 p.m. Eastern Standard Time. You're going to have Crypto Nightcap. Immediately after that, head over to Billy Goat Tales and hear the journey that Jenna X did. She pretty much hasn't made any content, guys. She did nothing but train for this fight. So come support her. She's an awesome person in the space, and we love her a lot. So go over to Billy Goat Tales, hang out, listen to Jenna's story tonight. It's going to be pretty cool. I'll see you guys there. But OC, tell these people what they get if they haven't smashed that like button yet, and now they want to smash that like button. What do they get?
Absolutely, guys. Thank you so much for joining today. And remember to click that like button, smash that like button, because if you do every single time you do it, we're going to have a new revision of numbers. And that might get sometimes in a better shape than instead of a worse one. So it's just like like a casino machine. Just click the like button and see those numbers change. If that happened, please click the like button. Let me know if that worked.
I love revisions. They're great. I do that to my wife all the time. How much did you spend? $20. I spent $20, and then the credit card bill comes out, and she goes, "I thought you said you spent $20. It was 57." And I go, "Those are revised numbers. Don't worry about that." That's how I handle that. Guys, you can revise your numbers with your wife too. It's not a lie if you just revise the numbers. It's a revision, not a lie. So, guys, we'll catch you back here tomorrow morning at 9:30 a.m. Eastern Standard Time for the morning market report. And be sure to check out Good Morning Crypto for the pre-market tomorrow morning with Lunar Beaches and LBC. And then this evening, like I said, come join Crypto Nightcap crew and then check out Billy Goat Tales. I will be right back here with OC and FD White for Trade Academy at 4 p.m. Eastern Standard Time today, right here at the channel that's bringing you content. So much so that we're all tired, and you guys love us and we love you too. So that's why we keep doing it, guys. We'll check you out here tomorrow morning, back for the morning market report. And welcome to all the new members. We will see you guys in the Discord. Till then, guys, trade safe. And as always, revise your numbers.
We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels fall low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, former Mexican spaghetti. Yo, crunch crypto with a deep dive to project dime. And if you like the visual powered by Tar Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels fall low. Sound off to get with them, the ZTS rhythm. Alexandra.
Yeah, that's my alumni, you know what I mean?
That was awesome, dude.